Good morning and welcome to the INNOVADERMA PLC Annual General Meeting. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question submitted today. However, all questions will be reviewed with responses published on the Investor Meet Company platform where it is appropriate to do so. I would now like to hand you over to the Non-Executive Chairman of INNOVADERMA, Ross Andrews. Good morning.
Good morning, everybody. I would like to welcome you to the Annual General Meeting of INNOVADERMA PLC. I am Ross Andrews, the Chair of the company. It is now just after 10 o'clock. We have a quorum and I declare the Annual General Meeting open. Given current situation around COVID-19 and the desire of the company to protect the health and safety of shareholders, this Annual General Meeting will be run as a partially virtual meeting. I would now like to introduce Blake Hughes, sitting next to me, Executive Director and our Chief Executive Officer, and also Andrew Dunderdale, Executive Director and Group Finance Director, who is sitting on the other side of me, but out of camera shot at the moment. After the formal meeting, there will be a short presentation on the company, which Blake and Andrew will run through. I'd now like to start the formal proceedings for the Annual General Meeting. The Notice of Annual General Meeting, together with explanatory notes, was posted to shareholders on the 20th of December. Accordingly, the requisite notice have been given. I propose, therefore, that with the consent, a Notice of Annual General Meeting should be taken as read. I think everybody will agree with that. Just one thing on voting. As many of our shareholders will not be attending today, because of COVID, we will undertake voting by way of a poll. For those shareholders that are here, please complete the poll card and hand back to Blake or Andrew. For those that are attending virtually, we will count your proxy card votes. The first resolution is to receive the annual report and accounts for the year ended the 31st of June 2021. I now propose that the annual report and accounts for the year ended 30th of June 2021 be received. The company has received proxy votes in respect to the resolution as follows: 1,824,195 shares were voted in favour, no shares were voted against, 29,919 shares were withheld. Thank you. The second resolution is to receive and approve the Directors' Remuneration Report for the year ended 30th of June 2021, together with the Auditor's Report on it. The company has received proxy votes in respect of this resolution as follows: 1,816,581 shares were voted in favour of the resolution, 7,464 shares were voted against the resolution, 30,069 shares were withheld. The third resolution is to receive and approve the Directors' Remuneration policy set out on page 20 to 21 of the annual report. The company has received proxy votes in respect of this resolution as follows: 1,816,581 shares were voted in favour, 7,464 shares were voted against the resolution, 30,069 shares were withheld. Thank you. The board is recommending that Crowe UK LLP be reappointed as auditors. Resolution 4 deals with their reappointment and Resolution 5 deals with their remuneration. And we'll now read out the proxy votes in respect of Resolution 4 and 5. Resolution 4, 1,816,731 shares were voted in favour, 5,861 shares were voted against, and 31,522 shares were withheld. In respect of the remuneration of the directors, votes were as follows: 1,824,195 shares were voted in favour, no shares were voted against the resolution, and 29,919 shares were withheld. Resolutions 6 to 10 concern the reappointment of the directors. All directors, each of whom is retiring as is best practice and being eligible, are offering themselves for reappointment at this annual general meeting. The board is recommending that each of the directors be appointed as a director. Now I'd like to hand the chair over to Blake.
I now propose that Ross Andrews be reappointed as a director. The company has received proxy votes in respect of this resolution as follows. 1,806,314 shares were voted in favour of the resolution. 16,278 shares were voted against the resolution. 31,522 shares withheld their vote. Thank you. I now hand back to Ross, who will continue.
Thank you, Blake. I now propose that Mark Michael Ward be reappointed as a director. The company has received proxy votes in respect to this resolution as follows. 1,818,186 in favour of the resolution. No shares were voted against the resolution, and 35,928 shares were withheld. I now propose that Andrew Dunderdale be reappointed as a director. The company has received proxy votes in respect of this resolution as follows. 1,818,186 shares were voted in favour, 5,278 shares were voted against, and 31,522 shares were withheld. I now propose that Blake Hughes be reappointed as a director. The company has received proxy votes as follows. 1,812,908 in favour, 5,278 shares were voted against, 35,928 shares were withheld. And now propose that Simon Piper be reappointed as a director. In respect to this resolution, proxy votes were as follows. 1,817,314 voted in favour, 5,278 voted against the resolution, and 31,522 withheld their vote. We are actually getting to the end of this rather dry formal process. We now come to resolution 11, which relates to the authority to issue shares. Before the directors are able to issue shares, they must first be authorised by shareholders to do so. The maximum number of shares that may be allotted under this authority is linked to an aggregate nominal value of euros 912,489.10, being approximately 1/3 of the issued ordinary share capital of the company. This authority will expire at the next annual general meeting or on 31st of December 2022, whichever is the earlier. The company has received proxy votes as follows in respect of this resolution. 1,809,509 shares were voted in favour, 13,083 voted against this resolution, and 31,522 withheld their vote. Resolution 12 will give the directors authority to allot shares for cash without first offering them to existing shareholders in proportion to their existing holding of shares. The proposed authority grants the directors power to allot shares without reference to existing shareholders up to a maximum nominal value of €273,746.70, being approximately 10% of the current issued share capital. Again, this authority will expire at the next annual general meeting or on 31st of December 2022, if earlier. The proxy votes received in respect to this special resolution were as follows. 1,805,103 shares voted in favour, 13,083 shares voted against, and 35,928 shares withheld their vote. We now come to resolution 13. The purpose of this resolution is to authorise the company to purchase some of its ordinary shares on such terms and in such manner as the directors may from time to time determine. The authority sought limits the maximum number of shares purchased to 2.5 million. The minimum and maximum prices may be paid for shares as set out in the resolution. This is a special resolution, and proxy votes were as follows. 1,811,695 shares voted in favour, 36,825 shares were voted against, and 5,594 withheld their votes. I now come to the last point on the formal part of the meeting, which is a serious loss of capital. This is a technical position, and pursuant to section 656 of the Companies Act 2006, where the net assets of a public company are half or less of its called up share capital, the directors must call a general meeting of the company, consider whether any, and if so, what steps should be taken to deal with the situation. This is not a resolution which is voted on. Just to give you a bit of background, the directors identified as a result of the prior year adjustments to the financial statements of the company for the year ended 30th June 2020, as announced in July 2021, the company suffered a serious loss of capital prior to the 31st of December 2020. Directors believe they have taken all necessary steps to resolve the situation, not least the equity fundraisings which were completed in the early part of 2021 and communicated to shareholders. This has resolved the situation. So I don't think there is any further action that is required in respect to this matter. This concludes the formal business of the annual general meeting. The final results of the annual general meeting voting will be announced to the markets through the regulatory news service in the normal manner and will be posted on our website. I would now like to hand over to Blake and Andrew, who will undertake a short presentation on INNOVADERMA and will answer any questions that have been posted on the Investor Meet the Company link. So, Blake, I will just jump up and allow Andrew to sit in the hot seat.
Thank you, Ross. Hello, ladies and gentlemen. We'll begin with a brief financial review for the financial year ended end of June 2021, but then we'll move on to more detail about our strategy and how it's progressing, sharing with you the information that was in the annual accounts, but also adding a little bit more color. So firstly, I'd like to introduce you to Andrew Dunderdale. Not all of you, I think, will have had a chance to meet him or see him. He is our Group Finance Director, and he'll begin the presentation.
Thank you, Blake. Good morning, everyone. As Blake says, I'm Andrew Dunderdale, Group Finance Director of INNOVADERMA PLC. I joined the company just under a year ago as the fundraise was ongoing and was promoted to the board in September. I'll take you through some simple financials at the moment. You see on the first slide a lot of the numbers and that table you'll recognise from our annual report and accounts. So for the year ending 2021, our prior year, the financial year 2020, you'll see that the figures have been restated. We'll go through some of those restatements on a later slide. The revenue you will see is down 22.7% to 10.2 million. Gross profit down 3% to 5.8 million. And gross margin has been increased more than 1,000 basis points to 56.7 million over the prior year. Those three figures taken together are important. It's another COVID impacted year, causing a sales decline in the beauty category. But also there's been a change of approach of the new management, focusing on profitable sales at the expense of sales at any cost. The gross margin has improved year on year, but the story of the first half and second half is as important, showing the second half was a gross margin of 61.3% as opposed to 49.9% in the first half. The basic earnings per share is improved 18 pence, still remains a negative 13 pence per share, and the cash and cash equivalents improved 1.1 million to 2.3 million at June 21. Next slide, please. So these are the prior year restatements. As you can understand, it's probably a significant amount of work that went into tidying up the accounts. The prior year adjustments totaled 8.6 million, which 4.1 related to the financial year ending June 2020. The majority of those adjustments relate to intangibles and goodwill. 3.3 million relates to goodwill on previous acquisitions. 2.6 of that was across Lamo and Skinny Tan, Prolong, and various others, and 0.7 related to the incorrect accounting on the step acquisition of Skinny Tan over the previous number of years. Marketing costs have been incorrectly capitalised in previous years, up to 3.1 million. And we had amortization on intangible assets, which have been correctly capitalised, of 0.9 million. In terms of inventory, we had 1.8 million of expired or redundant inventory, which required writing down. And then we had a number of other adjustments around accruals for audit, tax, legal, and various others, which had not been properly accounted for in FY20. The other adjustments at the bottom include a number of things, including bad debt provision or bad and doubtful debt provision, incorrect accounting for share-based payments, and foreign exchange. The tax-related liabilities, the impact of reducing our prior year profits reduced our tax liability for the last few years in the UK, which has also been reflected in the balance sheet. Next slide, please. So I thought I'd take you through the cash flow. Year on year, there's been a number of changes. You'll see that the operating cash flows from movement working capital shows the difference in EBITDA, or close to EBITDA year on year. In terms of inventories, these numbers are shown net of in the prior year, the 1.4 million prior year adjustment against that 676,000. Although inventory has increased this year, factoring that in that prior year adjustment, our gross inventory levels are lower, and it's something we're continuing to look to improve. The receivables for FY20 had increased. I believe at June 20, the main driver was that the retail receivables were much lower at June 20 due to UK lockdowns and retail closures. The receivable, the movement in FY20 of 1.9 million at June 19, accounts receivable particularly high at the time, boosted by 1.6 million to do with the Boots, the Skinny Tan launch in Boots. So that's shown as a change through FY20. The cash used in investing activities relates to some capital projects, whether it's the website relaunch and the rollout of the upgraded finance system, both of which came to an end shortly after I joined. And you'll see the cash generated from financing activities. The 4 million is the fundraise that closed in April 21, net of expenses. Next slide. Sorry. Obviously, we can take any questions on this later if necessary, and I'll hand you back to Blake.
Thank you, Andrew. And I just want to publicly also thank Andrew a lot for what he's actually done over the last year. As you can probably guess from the last couple of slides, it's been a year of fundamental transformation for the business, not least in the finance function. And I think the summary I would sort of bring to it all is that that sort of cleanup process is now complete and finished. And I think that gives us, it's an important part of our foundations as we move forward. So what I now plan to do is really to expand a bit on what people will have been able to read in our annual accounts in terms of our strategy. The strategy very much is a continuation of previous communications and what we've been talking about. But let me take you through that. So firstly, let me go back to the start. There's been a huge amount of transformation in the company over the last 12 months. And really it started by us being very clear and getting very clear about what is the company and what do we want it to be. And ultimately, who we are, and as we described it in this slide, really takes into account all of that work. This is the company that we think INNOVADERMA is and what will also make it successful. Firstly, we're ambitious, we'll be fast growing, we'll be digitally expert, global e-commerce focused beauty brand builders. So a few key points in there, but these are not just words taken lightly. This informs a lot of how we have basically been building what we do as a company altogether. So following on from who we are, the next piece was really to look at historically what are the elements that lead us to believe that that's possible. And internally we talk about this being, our DNA, and ultimately these aspects are what have basically built INNOVADERMA over time, but equally what we believe will turn it into the successful company of the future. And I think these five are very important. Firstly, we are passionate, digitally focused beauty entrepreneurs. Secondly, our brands target areas of under-catered for consumer needs. Thirdly, we create innovative, consumer-centric, high-performance products. Fourthly, all our products are vegan-friendly, cruelty-free, and packed with natural ingredients. And last but not least, we have industry-leading digital marketing and e-commerce expertise. This defines what is INNOVADERMA, and we believe if we stick true to these five pillars, this is what will lead us to success going forward. So before I get into talking about the sort of strategic pillars and how we're doing that, there's one more aspect that I thought was useful to share with shareholders and with stakeholders in general. And that, sorry, let me just change the slide. And that relates to a piece of work that I did as I joined the company last year in November, and then worked on it in early December. And at that time, I wrote myself a list of what I thought the jobs to be done were at INNOVADERMA. Now, anybody who's been following the company will know it's been a year of transformation, so clearly there was a lot to be done. But ultimately, this list of 10 jobs to be done has focused me in terms of the work that I've had to do, but equally has informed a lot of the strategic pillars that I'm going to come on to talk about. So the good news is that all of these 10 are now completed, and ultimately the company is now fundamentally a different company to which it was 12 months ago. But I thought it would be worth sharing with you guys what these jobs were. It started with open, transparent shareholder relationships, something I want to continue and to do more of going forward. The second was fix the foundations and simplify the business. The third, focus on profitable sales rather than just sales at any cost. Fourthly, reduce our stock holding. Again, stock holding is very much just cash tied up in a warehouse. So ultimately, we're aiming to increase the productivity of that stock. Fifthly, a clear portfolio strategy, and I'll come on and talk a tiny bit about that in a moment. Improve the online customer experience. We knew that our website had some challenges. Those have now been overcome, and we think we've now got an industry-leading website. Improve the in-store, on-shelf customer experience. Diversify away from the reliance on Facebook only. Strengthen our new product development pipeline. And finally, and last but not least, the right roles in the right countries. So as I said, I'm delighted to say that all of these have now been completed, and they basically form the bulk of what has been our transformation action plan over the last year. But equally, they very much flow into what our strategic pillars are. These pillars have really defined the work for myself and the broader INNOVADERMA team over the last 12 months, and also going forward into the next 12 months. There are 5 key pillars. The first one is right team, right location. The second, the financial foundations. The third, brand strategy. The fourth, customer experience. And again, last but not least, marketing model. Now, I start off just with the right team in the right location. I think this is an important part, and those who have been with INNOVADERMA for a while will, I'm sure, be aware of this. The majority of our business is on Skinny Tan. The majority of our business is in the UK, whereas historically the business wasn't set up that way. It was really more of an Australian-based company operating in the UK. We have fundamentally re-engineered the company so that we have ultimately looked to right-size the company with the number of employee heads or contractor heads decreasing significantly. But also, we've seen a decrease in we've seen a change with where those heads are located. With the number of heads in our Australia business more than halving from 14 down to 7, and with the number of those people actually working on global parts of the business rather than just Australia. The second part is the right skills. And fundamentally, this has been about e-commerce and digitally native skill sets for our employees, either existing or new, but also, and you sort of, with Andrew beside me, you'll have seen a strong finance function. That was something that was clearly missing previously in the company, but again, we now feel in a very good place with this. The third portion of this segment is the right tools, and ultimately that's about e-commerce infrastructure and digital analytics. If you're going to be an e-commerce and DTC-led business, you need to make sure that you are investing and focused on your website as your priority form of communication with your customers. And then finally, the right support, strong operational leadership, but also smart external support. So again, finding that hybrid model that can work for a company of our scale. So this first piece, the right organization, has been an important part of our strategy, and but we now feel like we have the right team in place to take the business forward. The second and very important part of the strategic pillars is the financial foundations. You heard a lot of detail from Andrew earlier, and I think it probably only gives you a portion of that, of the work that's been done. But ultimately, you know, working up from the bottom up to the top here in this pyramid, you know, again, we've really, and under Andrew's leadership, really completely rebuilt the finance function. It started with the team, but then very quickly led to a clean and transparent balance sheet, a new set of UK-based auditors, a focus on profitable promotions rather than just sales, gross margin improvements, which is the very centerpiece of our profitability strategy, inventory optimization, which is a combination of lower value of our total inventory, but also making sure that that inventory is in the SKUs that we sell the most of. And finally, live profitability metrics. And really, this has been about putting profitability at the focus of the organization as a whole. One slide here, but a huge amount of work and a huge sea change in terms of the operational focus of the business. The next strategic pillar was all around brand strategy. So this is our third strategic pillar. And ultimately, this was about having a brand strategy and a portfolio strategy that was based on maximizing sustainable shareholder value. Now, one of the questions I know that we've sort of had is, what is sustainable shareholder value? Ultimately, for me, this is about building brands and building a business that can grow year on year, and is not at the whims of one-off adventures. Ultimately, what that means is that all of our brand portfolio, we put into one of these 4 buckets that you sort of see beneath you. And for a brand to move from one bucket to the next, there's a series of criteria that have to be met so that we ensure that we are focusing the company's resources on where we get the biggest bang for our buck, both in the short term, but also more importantly, sustainably over time. If you look at that on the far right, that means we have Skinny Tan in our expand bucket. It's a brand that has been successful in multi-countries, multi-continents, and we believe the opportunity for further growth in this brand is huge. The second bucket is optimize, which is where we first will ensure, before we internationally expand a brand or a business, we'll ensure that it has the ability to be expanded profitably. So again, not focusing on sales, but is it something that can be profitable? Is it something that also is sustainable, that is continuing to grow? The third step is incubate, and this is really where we'll often launch brands, particularly exclusive brands with retailers. You know, we'll launch a brand, but we will very much incubate it. And what I mean by that is the brand can evolve as we work out what are the strengths and what are the opportunities. We'll continue to optimize it. And that's what we're doing with Nothing in the UK. And the fourth one is exit. And that's what we've done with Prolong. Exit doesn't mean forgetting about it. Exit means about maximizing shareholder value from that part of the portfolio. In the case of Prolong, obviously we had a brand and a product which we thought was a great proposition, but fundamentally there were limited synergies with the company's beauty topical business. And so therefore we identified that a joint venture was the best way to maximize shareholder value. So this brand strategy, this is one slide summarizing a lot, but ultimately shows you how we're thinking about the different brands within our portfolio. But brand strategy actually also goes further than just where does that sort of sit. It also touches a number of other areas. Specifically here, new product development. Anybody who knows the beauty business well will know that new product development is the lifeblood of a brand and a business. And ultimately, we've put in place a number of steps to ensure that our historical strengths of new product development is systematized, is fundamentally built in place and has the business, how the company does business moving forward. Making sure that we start early enough, making sure that we have the time to optimize things before we launch. Some key pieces, obviously we're renowned for our MPD already, but we still think we can step change quality and quantity of our new product development. We're still reducing the environmental impact with a number of with both Skinny Tan and Charles & Lee exiting using cardboard cartons with the products moving forward, but also looking to sustainable materials in terms of the bottles that they're manufactured from. Optimize and revamp packaging. Sorry, I just touched on that piece. Upgraded and strengthening our classics. Again, this is a realization that new product development doesn't always just have to be new products. It can be taking existing products and taking them up that level. I'm a believer that your innovation strategy needs to mix a combination of big new NPD projects, but with also growing your classics, those brands, those products that have proven themselves in markets. But again, if we just leave them alone and do nothing to them, the market moves on, and we need to sort of move these classics forward as well. A sharpened brand architecture, and I'll give you a couple of examples of that quickly in a moment. And then finally, in something that was, INNOVADERMA was at the forefront of this, and before many of the other brands in the category have done it, but it's something that we still hold very dear, which is always vegan friendly, always cruelty free. Those are crucial parts of our NPD strategy overall. Just how does that sort of look in a couple of different ways? And again, I won't take you on the long presentation, but ultimately, if I take Skinny Tan, our biggest priority at the moment, it was about really coalescing behind the brand equity of love your skin, love your tan. We know the skincare ingredient side of Skinny Tan has been important for a long time. And now as we coalesce around that as being what is the focus of the brand, it inspires, but also directs where we move the brand forward. But also what you see in front of you is some of the new packaging that will be coming onto your shelves and through your deliveries with Skinny Tan over this year. And really it's been cleaning up the brand architecture, moving products into houses which enable us to gain some halo when we launch, but also to enable customers to navigate their way through our range. You'll see we have a number of products now in the Tan and Tone collection. The coconut water collection has been filled out. No Tox is now a trio of products that I'm very excited about, which really broadens the appeal of Skinny Tan away from purely tanning customers into skincare customers who are looking for a natural, beautiful glow. And then finally, our core, those core products which will continue to sort of be the foundations of the brand. So as I said, again, clear brand equity, clear brand architecture, but then also clear what does the brand stand for, what are some of the key pillars of the brand. And we've mentioned always vegan friendly and cruelty free. And again, just in terms of the packaging here, minimum 30% repurposed plastic or 100% sugarcane bioplastic in our bottles moving forward, 100% recyclable bottles and tubes, and all of our cardboard, 100% recyclable and FSC board. Again, things that we think are important for the customers, but ultimately are also important are the right thing to do. So again, very similar story in what we've done with Charles and Lee. Again, probably won't go into it as much detail, but again, really coalesced around what is the brand equity? What does this brand stand for? And I think it's a very exciting brand proposition. The no-nonsense, high-performance, Aussie-made male grooming really defines what this is. It is, as our Aussie colleagues might say, it's male grooming with all the BS taken out. It has the Aussie personality that we think is so appealing both in Australia but also broader. So ultimately, again, the same process that we went through on Skinny Tan, we've also been through on Charles and Lee. The fourth strategic pillar was the end-to-end physical and digital journey mapping and optimization. A long sentence, but ultimately what that means is walking in the shoes of our customers, both from a digital standpoint, but also from an in-store standpoint. A lot of hard work has gone over this last year that puts us in a place where we are ready and waiting for the tanning season here in the UK. Our customer service experience has now become a real strength. Our website has industry-leading levels of conversion. Our in-store on-shelf navigation with the brand architecture work and the changes that we've done to the packaging will help us look significantly cleaner and clearer to shop in the likes of Boots and Superdrug. But we've also gone further than that. Our at-home tanning experience is really realizing that our job as a company and as a brand is not just to sell a great product, it's to help that customer get their best possible tanning experience. So that's mean broadening our offering away from just products to now a broader range of accessories and tools to enable customers to get their best possible tanning experience. But equally, it's also about information and videos and how-tos and a whole section on the website, which we believe now makes it the go-to destination for people wanting to understand more about the tanning category and how to achieve your perfect tan. And finally, last but not by no means least, it's being where customers already shop. 12 months ago, we weren't selling Skinny Tan on Amazon. Amazon sells in the tanning category today over £1 million a month in the tanning category. And I think, well, maybe let me, we started our journey with Amazon back very, very early in May, late in May. And what you can sort of see is every month we've seen excellent growth. For those who know the tanning season, the tanning season would peak over May, June, July, but then decline over the autumn months. What we've sort of seen is our business continue to grow despite that declining in the category seasonality. And that what this means is we think this is a great position to be going into the tanning season this year. I think just one key point here, though, of also how we operate with Amazon. We see our Amazon business as a real complement to our direct consumer. In fact, internally, we think of both of them as e-commerce. And why do we do that? Well, with Amazon, we have a seller relationship with them, which is that we sell our products on Amazon rather than we sell to Amazon. What that means is we're able to control the pricing ourselves. We're able to control the promotions ourselves. And it means that we can very much ensure that DTC and our Amazon business complement each other. And that's why we sort of see this together going forward as part of our broader e-commerce how to win strategy. The last strategic pillar is the marketing model. And again, transforming the business into a modern, higher return on investment, multi-digital media model. For those who are involved a lot in the digital marketing world, INNOVADERMA and specifically Skinny Tan was very much ahead of the game 2 or 3 years ago. It was one of the first brands really heavily in the beauty category into using Facebook and Instagram as a sort of key channel. But one of the challenges of digital marketing, and it's a challenge we all have to sort of face, is that if there is one thing that is for certain, it is that there is constant change in digital marketing. And what we're sort of seeing, obviously, is the level of competition in Facebook went up, the pricing on Facebook went up, consumers' trust in advertising was being reduced. This has led us to need to look at a more nuanced multi-digital channel marketing approach, whereby now, yes, Facebook still has an important role for us, but it's complemented by email, how we use our Google advertising, but also crucially influencer as well. These four aspects of the business are now probably the largest four, but there are probably 2 or 3 others that are coming on stream that we're continuing to evolve and to test and optimize, and TikTok, etc., comes sort of to mind. But ultimately, where we are now is using Facebook for one part of the digital journey. We'll use email as a means of getting our customers to return. We know that today Google is the way people use Google to search, both when they've got a question, but also when they're looking for a brand, means that being strong there is really important. But I think influencer is probably the single biggest change that we've seen over the last, certainly over the last 6 months. We've always been involved with influencers. We've always had more of a micro influencer focus, but with our Liberty Pool, collaboration, what you sort of see now is the company is very much choosing how we can interact and engage and partner with influencers in a way that can get us to audiences that today may be turning off from Facebook, turning off from their from advertising in general. For perspective, Liberty shot to fame. She has 1.5 million followers on Instagram. And if you look already at our partnership over 3 months, it's already garnered more than 3 million impressions, over 2 million Insta stories. Her posts about Skinny Tan have over 240,000 likes. All of these, we believe, are an important complement to what we were doing in our digital marketing. It's not a complete replacement, but what this is doing is talking to a younger cohort who are less advertising focused and are more willing to listen to Liberty or influencers, beauty influencers, as they look at which brands should they try. So again, going forward, we'll see this very much part of our strategy. So ultimately, those are our 5 strategic pillars. A bit of a whistle-stop tour. I hope this has put a bit more meat on the bones of what you will have read in our annual report. It's something that we will continue to focus on these pillars and continue to ensure that we've got the right foundations first, but then we're also building a strong, sustainably profitable business on these foundations. I'll close just with a reiteration of the outlook that you will have seen in our trading statement in January. So again, no new news, but ultimately, our strategy and transformation plans are working, as we sort of said. There's been significant improvement across both profit and operational KPIs. It's true that Omicron has sent a chill to late December and early January sales, but we're glad to see that that's now receding. We believe our foundations for the tanning season this year in the UK, which is our most important season in this sort of second half of the year, are strong. And we continue to be confident for the future with a focus on returning the company to profitability. That concludes the presentation that I was going to sort of share today. I know there are some questions, but I am just going to pause there quickly to allow you to to think about that, while I also just take a glass of a quick drink.
Blake, Andrew, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. But just for the company, take a few moments to review those questions submitted today. I would like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've received a number of questions today, and thank you to all attendees for submitting their questions. Blake, could I just ask you to read out the questions and give responses where it's appropriate for you to do so, and then I'll just pick up from you at the end.
Sure, I guess. So firstly, for everybody, we will go through some of the questions now, but we'll also post answers to many of these on our website as well. So you should have those afterwards. So I think there was one pre-submitted question before this all started. is the cash on your balance sheet plus any cash flow sufficient to pursue your growth strategy? And I think that, again, it's a nice and easy one to sort of start. We're not expecting to need to raise any new money. So again, I think ultimately not really a core question at this time. But obviously, going forward, if it's in the right reason for the business, then of course we will come back to shareholders with that. Let me just go through these questions. Okay. It says a few questions to begin with. Sorry, there's some very, very, very long questions. I might have to leave the very long question to one that we get to later, because it's not entirely clear where the question is as part of that. What kind of pipeline do you have for increased selling space for Skinny Tan, either in terms of selling through new retailers or expanding space at existing retailers? For me, this is one of the bits that I would. I think the key focus for me isn't necessarily just on expanding distribution. It's about growing our sales in our established distribution, but then also looking at how e-commerce, and in particular Amazon, can help enable that. I think historically the company may have had a bit of a fixation on number of points of distribution, etc., which, whilst an important way of driving sales, more important for driving sales is this sustainability. And what I mean by that is ensuring that our business is growing faster than the retailers that we're in, and also going to where the shoppers are currently buying, but we are not. So ultimately, as I look at that, I think we're covered in the pharmacy sector in the UK, in the supermarket sector. Amazon has been our big focus, and I think will be the big focus for the next 6+ months. But moving forward, I think it's about quality of distribution rather than quantity is probably the best way of saying that. We will, Skinny Tan is today in Australia, the US, the UK, and actually South Africa. I do believe that there's greater international opportunity as well for Skinny Tan. In the case of the US and Australia, that might include physical distribution as well as our more e-commerce distribution. But also we will look at, are there the right partners out there to bring Skinny Tan to more people in the world. As I said, for me, when I look at the size of Skinny Tan compared to many global brands, actually we're still on the small side. We still have lots of opportunity to grow, but a lot of that is about also making sure that you have the right proposition to expand into new markets. And I think that's where we are now with the new brand architecture, the new focus on where we are, and actually a portfolio, a brand portfolio that has the right to succeed. How do you think about cost per acquisition versus lifetime value? How have cost per acquisition been moving since you changed your marketing mix overall? So cost per acquisition is basically how much does it cost us to acquire a customer? And without getting too technical to all of this, as Facebook obviously takes up its pricing, the cost per acquisition will go up. So that's why we need to look at a blended cost of acquisition where we include all of the different channels that I was talking about, and which customers are we getting through Google, which customers are we getting through Facebook, which customers do we get through our influencers, etc. Ultimately, through an influencer model, it's hard to get an exact read of which are your new customers that come via that. So instead of cost per acquisition, we think of it much more on a digital ROAS, a digital return on advertising spend. And ultimately what that means is, in simplistic terms, it's about taking your sales and dividing it by the amount that you spend. And as we look at that metric of sort of basically, you can think of it as marketing spend as a percentage of net sales, is something that we will aggressively decrease this year compared to previous years. And the way that we think we get to that efficiency is by, as I said, the more nuanced model of moving to multi-digital channels rather than just Facebook, but also using lower cost models like email, etc., as a way of recontacting our existing user base. over 50% of our sales to me should be coming from our existing user base each year, and much better for us to contact them via email, in essence, for pennies rather than paying Facebook. So that's why I think digital ROAS is probably our greatest measure. How is competition evolving in the tanning space? A very good question. Ultimately, I think what I would say that there's more competition in the tanning space. There are more competitors coming in each year. And I think this is the same for the entire beauty category, as the world of digital and e-commerce allows more brands a chance to exist, where it's not just dependent on how much shelf space do you have in Boots or Superdrug, etc. Some people look at more competition and are fearful of that. I actually have the reverse view of it. Overall, still only 1 in 5 UK women will tan to a significant degree each year. And I see that as a huge opportunity. As the products, the application, the results continue to improve, some of the fears of tanning will be removed. But also for me, the important part of, as we continue to understand the impact that going and getting a natural tan in the sun has on our health long term, I think the ability for people to have all of the benefits that having a beautiful, glowing, natural looking tan has, but without the side effects of sunburn through to skin cancer, etc., I think is where I believe there's a lot of room for growth in the category size itself. That's not a job that one brand alone can do, but actually where the category will do it. And I think a way of doing that is other brands coming into the marketplace and particularly helping newer consumers in that younger 18 to 30 user base, more consumers to introduce tan as a part of their beauty regime. So how will we navigate the seasonality in sales of Skinny Tan, and how you deliver risk away from being over-reliant on Skinny Tan? So a couple of points there. Firstly, I don't think, as I said, I see a huge potential for growth in Skinny Tan. Ultimately, a business our size has a room to double, triple, quadruple if you look at the scale of successful global beauty brands. So actually, I don't see the focus on Skinny Tan as a risk. I see it as an opportunity. In terms of the seasonality of Skinny Tan, well, I think, yes, that by country, there is a certain seasonality. And I think what we will aim to do is to ensure that our global mix, as we think about Southern Hemisphere countries, etc., to see how we can use that to more balance our sales. But equally, and I sort of mentioned it in passing, the No-Tox product line is one that I have a personal passion for. And ultimately, if you look at the skincare market size, and skincare is 5 to, I think, maybe even up to 10 times the size of the tanning market. That category has more of a seasonality around the colder months each year, as people just use more skincare in the winter as their skin feels drier, etc. Now, our No-Tox product line, which is skincare first, but also with the added benefit of this beautiful natural tan, for me is a key way I see us as being able to target that larger group of consumers in the skincare arena, but also it gives us a real focus that we can, where the company and the brand can talk about in the months where perhaps traditional tanning are less relevant. If you think about it, people really tan the skin that other people that they meet can see. So in the case of in the summer, that's arms, legs, etc. But whereas in the winter, it's more about your face, and that's why I think the No-Tox line could be a very significant avenue for the company to explore. It won't be easy because it is going into a new part of the category for us, but ultimately I think it will be a very profitable venture in the midterm. Have you begun to contact potential US points of physical distribution? How long is this likely to get products on the shelves there today? I wouldn't like to put a timescale on it. These discussions can be quick, can be long. We have started some of the discussions. I'll let people know as soon as there is anything more concrete in that place. How does the margin you receive from Amazon compare to the margin you receive from DTC or through selling the physical retail? So I think so firstly, Amazon margins are basically in line with our DTC margins. We're in essence selling. Yes, we have to pay Amazon for using their platform, but ultimately there are certain cost advantages to using their platform in terms of the pick, pack, ship costs, etc. So ultimately, it's certainly not dilutive for us. If anything, probably helps on the upside. And in a world where we are able to control the pricing, and I think that's key. Ultimately, we are receiving the net sales of the purchase price minus VAT from Amazon. So ultimately, that gives us a strong point to build off in terms of our gross margin, but also our net margin building blocks. So let me just see. I think that might be it. There was one very long question, which I think I will leave us to answer separately because it's come through as a very, very long series of text. So I'm not sure, for the benefit of everybody online, I won't spend the time to go through that. So look, I think that concludes the questions for the moment. I'll hand back to Alessandro.
Thank you. I think you've addressed those questions you can from investors. And as Blake has already said, the company will review all questions submitted post today's event and will publish those responses on the Investor Meet Company platform. Blake, just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I just ask you for a closing comment?
Well, firstly, I just wanted to thank everybody who's joined us today. This was a hybrid in sense of online, but also in person. We didn't have anybody join us in person, unfortunately, but equally, this is perhaps the way that we will go. So to that point, I'd really welcome all of your feedback. You'll recall at the very start of the presentation, I talked about a transparent relationship with shareholders. I've spoken to a lot of you. I've had a lot of excellent input from a lot of you. But basically, I see feedback as a gift, and I'd welcome your feedback today. But equally, we'll start doing some more outreach programs over the next couple of months. And I'd encourage you, if you are interested, to engage. As I said, from my perspective, the company has a very bright future. It's been a huge 12 months of transformation. The company is fundamentally different to where it was. But when I came in, one of the things I said was that the products and the people were strong. It was some of the bits around it that needed fixing. I now think that we're in a situation where we have we're in the strongest position going into the tanning seasons, our key tanning season here in the UK. And with a fair wind, and we believe with Omicron receding, that we believe that we're in for a successful tanning season this year. So anyway, I thank everybody for your time and attention. And at 10:59, with about 30 seconds left of our allocated time, I will wish you all a good day. Many thanks.
Thanks again for updating attendees today. Could I ask attendees not to close the session, as you'll now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the board of INNOVADERMA PLC, we'd like to thank you for attending today's annual general meeting and good morning to you all.